9/20/21, 11:46 a.m. Pacific Standard Time. It's here. It's now. That is the Dow Jones. The price range 929.60 pennies, straight down like a rock, just like you see it. And basically, it's on an hourly chart, and that is for the intraday price cycles for that Dow 929 point drop. Now, throughout the day, the Dow tried to do the following. The 60-minute price action, nonetheless, has caused the fear indicator to break out to an all-time high that these markets have not seen in many months. And so as that fear indicator works higher, then you get more intraday lows in the market. So every attempt failed on the intraday level. And you have a bounce, and then they make lower lows in the Dow. That is the Dow Jones. We take the S&P 500 on a 60-minute handle. And like I said, we all know the timestamp. You go straight down. Their attempted rally, 60-minute level, another lower lows all day. With the gap down, we already know that that was a little bull run. That was a nice little trade, and so was this on the hourly level, as long as you know when to sell. If you don't know when to sell, you can end up like this down here. And that is generally what happened to people. And there it is on that 60-minute. There's a line right there, and you made lower lows. So you did have a up day. That was a nice up day. And so what? But they can never take out the tops, and we can see it. And that's how you get lower lows and broader corrections, is by understanding the mathematical side of a trend. That's number one. So for the people watching the video, if you don't know what I'm talking about, sign up for that free 5-day trial. Maybe you might learn something for once. Just maybe. All right. So here we are making lower lows, and that is the S&P, and we have the NASDAQ 100 live, the attempted gap down recovery with new lows, another attempted recovery, and more new lows. And all the big stocks, Amazon down 141, you've got the Google down 78, and you have GOOG down 80, and then you have, the list goes on, you have MELI down 92, Netflix is down 19, Tesla down 20, but nonetheless, that's on that NASDAQ 100 where they trade at. Then you have the broader NASDAQ comp. Same thing, attempted rally, lower lows, attempted rally, but guess what? Down they go. So when you make money when rallies fail. When they fail, they're only going to go one way, and that's going to be down, and that's how you get paid. And on the Russell 2000, we can clearly see once it started to slide, it broke. But we do like this index, and we do, because we think that when the market does turn back around, it's going to be the leader into the year end. Not only that, the trades will validate themselves. Nonetheless, lower lows in the rut. On the IWM ETF, that it is, look at that one. That one there is the ETF to the Russell 2000, and it's making lower lows. That's why we came off of that one for today only. So we know the SPY is getting whacked, as it is. People buy it, and they hold them. They shoot up. They don't know how to exit. They never do. And then they make lower lows. Okay, why? Risk management application, but being on the right side of the market. If you own the calls, you better have had the puts, otherwise you're dead meat. on this particular pullback that we're having in the short term. But once again, we started with the Dow, and we're down 900 points. The last hour of trading will start in 8 minutes. In the last hour, either we see more sellers or we see people trying to buy the dip going in to sell the opening bell gap tomorrow. That is a mindset that is still in the marketplace. Do people have a shopping list and want to buy stocks? Or do they make lower lows? The advanced decline line that we look at has clearly painted the picture that the percent level of the declines outweigh the advancer. 7, 8, 9 to 1. I mean, come on. So that means that your intraday bounces are going to do what? They're going to be weak. Now we're going to conclude going into the last hour, and we'll leave it with the Dow. And good luck. Sign up for the free 5-day trial if you want to be able to survive.